And the floor is yours.
Can you hear me?
Yes. There you go.
Okay. I'm starting to sweat there. We just got these. Okay. Whew. All right. So I'll just start from the top, but it sounds kind of weird. Let me just turn it up a little. How's my volume?
You sound good and clear on our side.
Okay. Sounds kind of weird over here, but okay. I can live with it. So will I be able to share my screen as well at
Yes.
some point?
Yeah, you're
Do I
good.
just-
You have co-host permissions as well.
Okay, gotcha. How do I do that just so I know?
At the bottom on the panel, it should just be allowed. The share screen button should just show up for you.
Okay, cool. Yeah, I see it. Okay, cool. Well, hey guys. Let's
Good
see.
morning.
Okay, I can see you guys now. Cool. So this is short-term rentals 101, super basic. I'm just going to run over some high-level bullet points, and then if you guys want to dig in deeper to any of them, just let me know. So I'll start with just my story. Hey, how's my volume? Okay. Asking my neighbor. Make sure I'm not disturbing anyone. Screaming. I'm in a coffee shop. So my story, this is how we got into short-term rentals. So currently I'm a realtor in North Georgia. I focus on buyers primarily, investors, so buy and hold, long-term rentals and short-term rentals. And the way we got into short-term rentals, so we have 3 active Airbnbs now. And then we have 2 long-term rentals. One's a residential, the other's commercial, but we're really excited about short-term rentals. So we're going to keep pivoting into that direction further. But so my first house that I bought was a USDA zone. So it was 0% down. So it's back when I didn't have much money. I don't know if I do today, but I didn't have hardly any then. So I bought this USDA zone, which it's kind of like rural areas. If you want to know more about that, I can share that with you later. So that's how I bought my first house. And then we bought another house after we got married, and we kept that house as a rental. And then a year later, we realized, we're really not cash flowing that much, maybe like $100 a month on this rental. And it had appreciated quite a bit. So we decided to sell it and did a 1031, which in hindsight, we actually didn't have to, but that's another story. So we moved the profits and we bought 2 duplexes with that money, each with 25% down, conventional. And then we ended up renovating them and decided to do short-term rentals with 3 of the 4 units actually. So we've kind of been transitioning those. So that's how we got into it. It's kind of a slower metamorphosis. But if you guys have any other questions about how we got into it, I can circle back to that later. But I wanted to talk about 2 primary things here, but pretty foundational stuff. One is the money. So how do you get in as far as financing goes? That's a big, I think, deterrent to a lot of people. It's just the money. And then the other part is market and analysis, kind of 2 things. So I'm going to talk a little bit about how you decide where to invest and just, where do you start? It's very overwhelming. So I'm going to try to take away some of the overwhelming aspect of it and make it super simple and super easy. Okay, so we'll start with the money. So there's a few ways to get into it. The cheapest way, which is like virtually $0 to get into it, is to house hack. So essentially, you have a room in your house and you rent it out. In this case, you rent it out on Airbnb. So that's the easiest way to get into it. And if you're working as a realtor with maybe a younger, not married, that don't have kids, don't care about having roommates, that's a great way for them to get into it, especially. So that's the cheapest way to get into it. The next way is called arbitrage. You may have heard of this. It's pretty popular. And that's basically where you lease an apartment or a house, but you have to have permission in the contract and the lease that you're allowed to then turn around and put it on Airbnb. So it's called arbitrage, rental arbitrage. I don't know a ton about that because it's not really a strategy I'm super interested in, but I'm sure you can find out a lot of information if you wanted to look that up. That's another really inexpensive way to get in. So that's why it's pretty popular. And then the third way is more the conventional route. So financing. So a few options there. Typically, you used to be able to do the 10% down vacation home loan, but Fannie and Freddie kind of did away with that essentially. It's still there, but it sucks. Honestly, it's garbage. So it's not really a viable option. For years, that was how most people were doing it because it was 10% down. It is the best option out there. Really good terms, but it's virtually gone. The fees are just exorbitant, and it's essentially useless. So there's really, I don't think there is a 10% anymore. I think they're kind of gone, unfortunately, like as of this month. So you might still find some 15% out there. Most of them are going to be 20, 25. But if your credit's super good, you probably find 15. So you're looking at, let's say 15 to 25% down. Conventional is still probably the best route as far as terms go. The only negative to conventional is you can't finance it in an LLC. You'd have to do a quit claim deed and move it to the LLC afterwards. And there's some debate over the nuance, legal nuances of that and the pros and cons of that. But otherwise, conventional is probably still the best terms. But if conventional is not an option, the next option is debt service coverage ratio. You may have heard a lot of people call it Dscr. If I'm moving too fast, let me open up the chat and see. You guys can tell me. So Dscr, put that in here. It has to be 65 miles away from your primary residence. What is that for the vacation home loan? Yeah, okay. Yeah, there's some rules with the vacation home loans for sure. But it seems like one of those things where every lender has a different answer. So, but that was probably true. Actually, I don't know. Yeah, that's probably true. So DSCR is a really common term. It's good to know. You'll hear a lot of investors tossing that around now. I don't know. It just came out of all of a sudden. It's like everyone's saying DSCR, DSCR. So
what does that stand for again, Holly?
Yeah, it stands for debt service coverage ratio. And essentially, this is a product that you would go through a lender, just a mortgage broker. Not all of them have it though. So you'll want to, when you compile your list of relationships with mortgage lenders, this is one of those items that you might want to add, like, hey, Joe mortgage broker has a DSCR product, because they don't all have them. And what it is a lot of times for people like that can't qualify for conventional, or they can, but the terms maybe are garbage. It is a bank statement loan. So you'll hear them say bank statement loan a lot too. So they basically use, it's good for business owners. So they'll use like your bank statements. I don't know all the ins and outs of it. I'm not super knowledgeable on DSCR, but they also use the rent projection but they use long-term rent projection. So it's a little more traditional investor's loan. Let's put it that way. They use long-term rent projection, not short-term rental rent projections. Okay. So DSCR is the one you'll hear kind of people mention after conventional as an option. But the third option is what I call direct lenders. Sometimes you'll hear people call them hard money, but they're really not hard money. They're actually different. I call them direct lenders. A couple that you can look up just to have in your portfolio. I like Cram Capital. I just put it in the chat. They're out of Atlanta, but I think they're a national lender. And then the other one is called The Lender. They're pretty popular. The Lender is actually, I think, one that's most commonly white labeled with mortgage brokers. So if you hear a mortgage broker say, "Oh yeah, we lend on short-term rentals," they're probably working with the lender. But Cram Capital, you just go direct with them, and they're great. So basically, what's cool about these options, they lend based upon your credit score. So you do have to have 680, and then if you have 720 or above, the terms are way better. But a lot of people think that hard money and direct lenders are just like exorbitant fees, exorbitant interest rates. So, but they're actually not really anymore. They're, especially with how rates have increased, they're not that big a difference. Usually you'll see about a point to maybe 2 points higher for the interest rate. You might see, some extra fees, but nothing crazy. And then they're 30-year loans, just like your conventional. And the cool thing about them is they don't care about your income. It has nothing to do with your income or your income history or your work history. You don't have to work. So they don't care about any of that. All they care about is your credit score. You have to have a few months of reserves to cover the mortgage essentially. And then they care about the income potential. So they will actually look at AirDNA, which I'll get into in a second. They'll look at the projections of the actual short-term rental income, which is typically 2 to 3 times, if not more, higher than a long-term rental. So those are really, in my opinion, a little bit better fit for a short-term rental, but it's good to just have the options on the table and then you compare which one's best. And then one thing just to know, like when you run your numbers for a short-term rental, you want to put in an estimate for furnishing. So it's a pretty wide range. If you get really scrappy and really thrifty, I'd say $2,000 per bedroom, but that's getting really creative and a lot of Walmart. This last one I did, I went pretty thrifty, and thank you, Walmart. I spent a lot of days, a lot of hours at Walmart. And then at the most, I've heard $10,000 per bedroom, but that's going to be for like luxury. And when I say per bedroom, I mean essentially if it's a 3-bedroom house, you just, to estimate the whole thing, I'm talking pots, pans, everything, furnishing, you just take the bedrooms. So if it's $10,000 per bedroom, you're doing luxury, then you can estimate it's going to cost you $30,000 to furnish that place. Okay. And
Hey, Holly, what kind of down payment do those 2 lenders require?
Yeah, it depends on the credit score, but I think if it's below 720, it's either 20 or 25%. I think if it's higher than 20, it might actually be 20. I think they raised it recently. So if it's below 720, I'm pretty sure it's 25%. And if it's higher than 720, then I think it's up 20%. But you'll see too, like they have different products within those products. So there may be some, some may have less but worse terms, that sort of thing. Yeah. The threshold to get in has gone up a little, unfortunately. That 10% was a nice vacation home loan. We're all grieving that that's gone. Any questions about the financing piece before I move on to market analysis? Someone asked, you're financing your furnishings or just recommending we keep that in mind for cash? That's a good question. So I'm all about financing on good terms, and there are a ton of 0% interest credit cards or, even lines of credit. There's all sorts of things out there. Now, my recommendation is, take advantage of them to buy the furnishings as much as you can, but do as much as you can in your LLC. So if you can create an LLC, which I highly recommend, get as many of those, put the debt in your LLC, because you don't want it to affect your personal credit. So that's the only caveat I have with that. And then just put in your calendar when those 0% interest rates expire, so you can make sure you pay them off in time. But you know, some of them are 6 months, some of them are a year. So yeah, there's a lot of great financing out there the furnishing is really not as scary as you might think. And then you have, of course, Facebook Marketplace, but that's going to be cash out. So maybe you finance more of the newer stuff, but then you have enough cash to get creative and do more of the Facebook Marketplace stuff. Any other questions? Nope. So, okay. All right, so let's move on to market analysis. All right, so my advice on when it comes to markets. So I'm that type of person that wants to like have a place everywhere, you know. Like everywhere we go, I want to have a cool place there, you know. It's like an addiction. But it's very overwhelming when you are trying to look in so many different markets. So my advice always is to pick three. Three is manageable. You know, have three markets that you kind of know. You know, I like this north side of town, or I like things above this street. You know, and you really get to know those three markets. It just makes it so much easier when a realtor brings you something. You can be a lot quicker to make a decision. So my recommendation is three markets. How to pick markets? I mean, I always say, what excites you? You know, what areas seem fun? Because it should be fun. It's hard enough as it is. It should be fun. So some people invest in hospitals. So hospitals are one. Of course, tourism, colleges, universities are big. And then I'd say outdoors. You know, mountain biking, skiing, all the usual suspects, hiking, trails, you know, that sort of thing. So those are the four main ones that I could think of. So tools, this is where I wanted to share my screen and show you guys some of the tools I use to analyze. Let's see. Share screen. Share. Okay. So, can you guys see my screen?
Yes.
Okay. Thank you. Old fence permit application. All right. So I'm going to show you a few things here. Oops. Okay. All right. So first one's called Rabu. This is a newer one, actually. It's pretty cool. So Rabu. What Rabu does is it gives you a 1 month snapshot. It is an area you don't have to log in. Rabu analysis. Let's see. Here, short-term rental calculator. Oh, huh. Oh, here we go. Yeah, here we go. Okay. So you can put an address in. Let me think. Put my old home address just to see. Let's show you guys what this does. And this is all stuff that I supply my clients to help them. Okay, so you can put in any address, show you this is a seasonalized revenue projection. So if you click on the information, it'll kind of explain what these numbers mean. And I'm still learning it as well, but that's the monthly rent projection from short-term rental. And then you can go down here. Again, these are all 1 month snapshots, so just be aware of that. But it gives you an idea of how this season's looking. And what I like about it is it can help you see some comps. So that's super helpful. Okay. And then, of course, the other popular one is AirDNA, which you may have heard of. So basically, I'm going to put in a city up here in North Georgia. All right. So AirDNA, there's some information you can get for free. I'll get out of the way here. But the best information is not free. So come on. So I don't know why it's having issues. But what you really want to know are occupancy rate and average daily rate. So ADR, you'll hear them say ADR. So occupancy rate, ADR. And basically, the idea is you take occupancy rate, so 0.65 for Blairsville times 365 times ADR 210. And that gives you your annual gross. And then you divide that by 12, and that gives you your monthly gross. And that's the number you need to figure out. So when you're looking at a property, if you purchase this, just so you know, here's what I do. I buy the monthly subscription when I need one of the zip codes. And then you just put on your calendar to make sure you cancel before the month. And then I screenshot everything that I need. Probably against the rules. I'm sure AirDNA wouldn't like to know I do that, but that's what I do. It's a great way. I keep a folder in my laptop for every market that I've done that, because it can get expensive. But the cool thing about this is if you drill in, again, it gives you comps. When you pay for it, you get a lot more cool information. But then you can go into Airbnb, and when you have a property that you're analyzing, you can really drill in and find comps. So, so what you do is with Airbnb, if you see something, you're like, okay, that kind of looks comparable to the place I'm looking for, then you just go in here and slow here. All that's loading. So basically you go in here and you just play around with seasons. So you got 4 seasons, just plug and play a little manual fun here. So, here's one for spring and just see how it looks. Okay, 168 is what she's got it at. And then you go to summer, see what she's got it listed at. And then you go to fall, et cetera, and so forth. You get four rates, let's say, and you can start to get an idea of what the other people's average daily rate is and compare it with the one that you found on AirDNA. Is this all making sense? That's how we kind of get a really good confident number of an average daily rate and the occupancy rate. And you can get a pretty good idea of that gross monthly income. And when you have that, I use Bigger Pockets rental estimator. So in Bigger Pockets, my rental property calculator. I go into the rental property calculator, and this is where all the magic happens. So all my reports are kept here. I am a paid member of this. I don't know how much of this you get free or not. I know you get some usage free for a little while. Just to show you here's what a report looks like. This is pretty cool. I also share these reports in a PDF form with the lender. Just really makes it look like you know what you're doing. They like it. All right, so for this particular property, monthly cash flow is 902. I mean, that's solid. Cash on cash return 24%. And I've got all my expenses in here. I mean, it's an art, not a science, and I do overestimate, I think. But I mean, that was a solid one. I put electricity, gas, water, HOA fees were none. So my other is kind of a catch-all. you can maybe figure out your own, but this is the one I've been rocking with. It's just a catch-all. So, paper towels, lots of consumables, pest control service, um, lawn care. So there's a lot that can go into that. Insurance is a little bit more expensive than short-term rental. I usually plug in 175. It's usually about 50, 70 bucks more a month because it's actually essentially commercial insurance. It's more beefed up. You have to have special insurance for short-term rental. It wipes out your it wipes out homeowner property insurance. So you don't pay for both. It replaces that. But you can't just use landlord insurance for short-term rental. Most of those insurances actually have a clause in there that will say basically if you're using it for a short-term rental, it could negate the whole policy. So you really don't want to use a landlord policy for short-term rental. And that's really all I have, guys. Any questions about any of this stuff?
Hi, I came on late and I'm just catching the tail end. I'm a host here in Fort Lauderdale. I have two and I'm paying price lap. I believe that was the first time shown to me the way you did it. So I'm going to cut them off because it's $39 for both properties just to analyze what the rate should be. Like what's going on here. I'm over near the water, so what's going on downtown? They up my rates or they lower my rates. I'm just not that involved, so I don't mind spinning out. But I need to find out again from you. You're using other people's homes as rentals for yourself, correct? And not purchasing, or are you purchasing your home?
We purchase them all, so I don't do rental arbitrage, and we self-manage. So if you have any questions about any of that, you can, always feel free to reach out to me too. But that's awesome that you're a host.
Yeah, it's hard, I'm telling you. But thank you.
Yeah.
I have a quick question if you can hear me.
Yeah, shoot.
So in the rising interest rate environment, assuming that we're not doing rental arbitrage, but actually purchasing, the homes to rent them out, and maybe anybody else on the call can answer this too, but in with the prices still going up and the interest rates going up, does short-term rental appear to be advantageous over long-term rental, or is there any insight somebody can offer me about which you might look at as the interest rates continue to rise?
Well, I mean, at the end of the day, it's all about the numbers. So,
Yep.
and all about what floats your boat. For us, short-term rentals are just, there's a little bit of a fun element that the long-term rentals didn't have. The long-term rentals were great. But like at the end of the day, it's just about your goals, how much, short-term rental is more active. Even if you offload it to a property manager, I still say it's probably more active than long-term. It's going to be more passive. So it just totally depends. But as far as the interest rates, I don't really see, unless someone else has a different answer, I'm not really sure how I see that affects it, because at the end of the day, it's all about the numbers. So if the things still work, I mean, your long-term rent is going up, but so is short-term rental ADR. So I don't know. Anyone else have a different answer?
Yeah, I have a question. We've been looking in Florida for properties, and there's a lot of counties that don't allow for short-term rental. Is there a list, or is there a way of finding about them other than just going into the county website and finding out what the terms are?
Oh my gosh. If there is one, I think you would make a lot of money. I think if someone sat down and took the time, which it would take so much time, to sit there and go through every ordinance, which by the way, they change quite often. If you went through and did that, I've actually thought about this. Like maybe I should make a website that just has all the ordinances and all of the friendly, I don't know if that exists. Someone tell me, because I think you would make some good money on advertising on a website like that.
I know before I got started, I made sure the city, because we had to pay taxes in that city too, but what's allowed in Fort Lauderdale, I know they did not want you to do townhomes. They said it had to be a single family home. Although condos are doing it, but we have more single family homes that following the rules and regulations here. So you just need to find out what condos are around it. It's not many anymore. We used to have a lot. I think Hollywood still allows it, and Hollandale, areas like that, but they're cracking down on condo short-term rentals. And it's been just single family.
Yeah. Believe me, ordinances are the vein of my existence. I've been involved in a few municipality battles. It's actually kind of fun in a weird way. But I like politics stuff. But no, it's a pain. It's a pain. Ordinances are a pain. I wish every state would just have a blanket ordinance and just be done with it, because it just gets complicated. County rules, city rules, then you have the neighborhood rules. It's difficult.
I kind of have a question. I guess it's more of like I'm asking for experience here because I'm in Daytona Beach, and I think in my area here, because I've been thinking about moving out of my house and putting it on Airbnb, but I think I have to do a 30-day minimum. So I was just looking to see if anybody had any experience with that, with successfully doing a 30-day minimum in an Airbnb.
Alyssa, the best thing is to call the county or the city of Daytona. I talked to them when I was looking at a property over there about if it was in the short-term area, and there's certain pockets of Daytona that they allow short-term rentals in. Not all areas of Daytona Beach. You would think big tourist destination, it would just wherever, but they've kind of cracked down and have different areas, and they'll send you a map of those pockets that they'll allow, short-term rentals, Airbnbs.
Right. I mean, I'm on the 30 days. So I just wanted to know if anybody had any success with 30-day minimum rentals in their Airbnbs.
So
If I can
ahead.
chime in here for a moment, this is Trisha Hausman. One of the things with rental arbitrage, when getting a corporate lease and then releasing it out, so to speak, that's one of the techniques that a lot of individuals have utilized to get around those ordinances that restrict to a 30-day minimum. Because a corporate, like if you own a property, whether you're arbitraging it or you own it personally, and you have a lease agreement with a corporation or a property management group, it's one of the things I'm doing for one of my investors as a property management group. Their lease could even be a long-term lease, right? But then within that property management lease, or that party, that corporation that is arbitraging, whether it's yourself or other individual, it meets the compliance in the technicality. The real question is which municipalities are enforcing it and what is the consequence, right? So if the consequence is minimal and they don't have enforcement, then it's one of those where you go, yeah, okay, it's on the books. It's law technically, but you run your risk assessment and you're like, but the fine is going to be, or you're going to get, 2 or 3 warnings first, and then you shift. And those are just a concept for you to think about. So that way you're not too afraid to step into it. And yet be able to have your answers in advance when you're doing your preliminary research. And I put on the website to everybody, municode.org is the I sound like Porky the Pig, municipality ordinances for every county in the country. So that's a great starting basis for you to, be able to do
Could
your
you-
research.
Could
That's
you
all I-
type that in the chat?
I did already. Yep,
Oh,
I
okay.
sure did. It's in municode.org. And the website is a little funky, but you go to the library and start with your own, like if you're first going into it, start with your own county so you can get familiar with how you're researching, because it's like going into a college library research. Like when you put in your keywords, a lot of different things will come up, but the more you use it, you'll get familiar with how Municode works, and it is going to be your best friend on every single real estate deal that you do when you're representing a buyer on anything. So if you want to know environmentals, if you want to know setbacks, if you're doing, building or renovations, like that's where you find out everything.
Also, that's good advice. Also, with the Daytona, I would recommend that couple things to find out if the 30 day is a viable option. Just go to Bigger Pockets and search Daytona 30 day or Daytona short-term rental, and then see what's being talked about. And then also you can even post a question on there too, see who else is doing it. The other thing I would say is to see if there's a local Daytona Beach short-term rental host Facebook group and become a member, and then just ask them.
Okay, thank you.
Sure. Good luck. I'm just looking through to see if there are any other questions.
Hey, the other thing I wanted to chime in and comment on too, great introduction on the different lending options for everybody. And for those of you that are sales associates, here's an encouragement to go through and get your broker license training out of the way whenever you're ready, because in your broker licensing, one of the ratios and math formulas, because math is fun, that you learn is the Dscr ratio, the debt service coverage ratio. And that way it's just a part of every single deal that I look at. I just take all of the ratios from the books and drop it in there. And when you do that, your value add to the end customer is unlike what the typical agent does in the marketplace.
Steph Gonzalez asked, she's in North Georgia as well. Oh, hey Steph, you'll have to reach out to me. How is the short-term rental market in North Georgia? It's great. I would say it's still probably, I don't know if any market I can think of beats it as far as like under 400K solid investment for a short-term rental market. It's tough to beat.
Yeah, awesome. We'll definitely have to get together, okay? I'm in Gainesville, Georgia.
Oh my gosh, I'm in Dawsonville.
So we got to meet up.
For sure. Why don't you just come on over to this coffee shop right now?
I definitely love some coffee.
Awesome.
You have a question in terms of when you're first starting out, is it profitable to go with a 1-bedroom condo in a desirable area versus looking at more of a conventional long-term, a larger unit, or what's your sense on that?
Can you repeat that question? I'm not sure I caught the first part.
Actually, my wife will say it better than I. So.
Sorry.
Hey.
Just wondering if like just to get started, we're looking at a 1 or 2 bedroom condo, and I'm wondering with a smaller unit like that, are we better off just sticking with a traditional renter, or are those still popular enough that it would be profitable as an Airbnb?
Oh yeah, 100%. 100%.
Really? Okay.
Yeah.
I guess people rent rooms, so.
Yeah, think about that. Hotel rooms. You know what you can also do when you go on that AirDNA, and if you're looking in a specific market, this is that'd be what I would do is go ahead and buy the AirDNA report for a monthly access. But you can see in the AirDNA, it'll show you how many, what percentage or how many of a studio, 1 bedroom, 2 bedroom, etc. It'll show you how many there are. So if there's less of that particular, let's say there's less studios, hey, you could argue that that's actually probably a better thing to buy because it's less competition. So
Yeah, the availability of something smaller for a couple or a single person traveling, or they're not going to want to rent a whole house kind of thing.
I love it. I mean,
Yeah,
okay, a
great.
little higher occupancy for those. I would argue. So yeah, I think it's a viable option as long as the numbers work.
Okay, awesome. Thank you.
Can I chime in there? This is Lisa again. I think I am going to be purchasing that, what you said, because I'm getting a lot of people ask, can I just rent a room? I have a 5-bedroom house and then I have a 3-bedroom suite. And it's a little costly for a lot of people if it's just 2 people. But I do get a lot of requests for that. If they're just here on their honeymoon or they're just, in town and it's only 2 or 3 people.
Yeah. Yeah. Deborah, I see. Oh, go ahead. Go
Is it
ahead.
working now? Okay. Yeah, where I'm at here in the Smokies, the 1 and 2 bedrooms actually tend to do a little better on the rental than the bigger houses. Most people I've learned are trying to stay away from the bigger houses because of parties and things like that and more damage caused to the homes. The 1 and 2 bedrooms aren't seeing that. You're getting the honeymooners and the smaller families, couples, people that are truly there to enjoy each other or get out and about.
Yeah, probably a little less headache.
Mhm.
Deborah, I saw what you said about the housing shortage. I would love to share some literature with you that might change your mind.
Well, here it's just there's Airbnb places allowed in the area, but like in Sevierville, it's not as limited as in Pigeon Forge per se. But Pigeon Forge is more of your tourist destination, like your go-karts, all your entertainment, your commercial buildings. It's not going to be a whole lot of residential. And where they used to have residential, they've allowed the Airbnbs to take over. So now when you've got locals that are being forced out of their homes that they've rented for the past 5 to 10 years or whatever, all of a sudden now the sellers are like, hey, I can make money on Airbnb, and they're selling their homes. So I've had numerous friends that's had to move out of their homes in the past year because of their homes being sold. So the sellers could Airbnb them and make money off of them, which we understand there is money in the market there. But it's just sad that in our area, there's not people building residential homes as much as they're building cabins and things for the Airbnbers.
Right.
We even have people here that are building complexes and condo units for what we call J1s. It's people that come in from other countries to work for 3 months or 6 months and go home, but they won't allow locals to live there. It's like, y'all are so racist in a way when it comes to the locals here, because they're being forced out and they have nowhere to go. We're the ones that made this area what it is.
Yeah. Well, hey, I'd love to talk to you about this offline because there's definitely a lot of moving parts to that equation. And I think, I just think short-term rentals are kind of, investors often get blamed for the whole housing crisis, but there's a lot more to it. And, but yeah, I'd love to talk to you about that offline. But let's see, any other questions here? Yeah, Key West. Key West with their 30-day minimums. I love Key West. Great. Thank you. Thank you, William.
Hey, Holly,
Yeah.
we're not seeing anything on there. Maybe you can stop this screen share for now so we can all see each other.
Oh, sorry.
No worries.
Sorry, I don't do this very often. Stop share. Okay. There you go. Any other questions? Let's just go through here, the chat. Okay, I think that's it.